again, what that does is it tells us that even with a sinking dollar, the markets aren't getting much of a bounce. And actually, this is something very important to understand. There's going to be a point where the dollar is falling, and this is the scariest of all. The dollar falls and the markets fall too. These game plans for me are a way for me to prep, but me to also help you prep. So again, what I find, and this is just from my own personal kind of upbringing as a trader and learning the ropes, is that those of us that look at charts ahead of time, that kind of analyze what's moving on the day, basically formulating a game plan in your head, it helps you essentially make more money. If you look at people that, again, just jump in head first without a game plan versus people that game plan, you're going to see a difference in financial profits and stability and long-term, basically financial independence. So that's what we're here to do, folks. And again, we're going to jump right into it with some charts. It's awesome to be here with you guys. And again, my pleasure to get rocking and rolling. So the first things first, we got some basic action here in the dollar. The dollar is weaker this morning. The US dollar is trading lower. What does that mean, guys? You should know this by now. If the dollar is weaker, assets like stocks and crypto are going to be higher. Now, the S&P is not that much higher. The spiders are barely trading up on the day, just a little bit. Last I checked, just over $1. Actually, right now, only 21 cents higher on the SPY. So again, what that does is it tells us that even with a sinking dollar, the markets aren't getting much of a bounce. And actually, this is something very important to understand. All right, I want to show you the charts here. What we're going to do is we're going to go into the charts. This is the dollar. All right, so basically what I want to do is look at this, right? And what we can clearly see here on the US dollar chart is that we had a down day, a small up day, and then another down day today. If we flip over to the SPY chart here, what we can see is that we had the down day and then a week up day when the dollar fell. Notice how we had a red candle here. Look at this. We opened here, and by the end of the day, even with a fall in the dollar a couple days ago, we did not have much of an up day. Yesterday, same thing. The dollar was a little stronger. The markets tried to fight, and they fell back down. Today, again, the dollar is sinking, and we're seeing the markets barely catching a bid. In fact, the S&P just went negative as I'm saying this. Now, the reason why this is important is that over the past years, and I mean, I'm literally talking years, the market has had an inverse relationship with the dollar. When the dollar falls, the markets rip higher. The fact that we're not seeing that here is very problematic. That's a problem. All right. So again, to me, that's a warning sign of issues to come. You guys know I continue to hold generally a fair amount of shorts on the market, and I continue to look for downside. Doesn't mean every day is going to be down. We're going to get bounce days. But ultimately, again, this is a market that is in troubled waters. We're basically entering a phase now where, yes, inflation's coming down, but not enough to get the Fed to step on the sidelines, let alone cut rates. And that is a major problem. All right, so let's go into some other charts here as we get through here on the charts. We do have some movers this morning. I know a lot of you guys want to know what Bitcoin is doing. So let's start out with Bitcoin. Bitcoin remains in this channel. Notice the channel here, guys. Now, notice Bitcoin is getting a little bit of an up move today. All right, that's a weak dollar response. That's normal. All right, now my issue here is that, number one, we have a defined major top at 25,200 to 300. So that's your line in the sand. As long as that holds, you have to be on the negative side of Bitcoin. It hit resistance. It's pulling back off resistance. The other issue here is, take a look at this. Basically, we had the 4 down days in a row, 1, 2, 3, 4. And then what's going on here? Let's draw a trend line in and put it in right there. That's a bear flag, an in spirit of bear flag starting to form. So when I see this pattern, what it tells me is that probabilities are now favoring downside on Bitcoin. Even if we get a little bit of a bounce here and there, as long as this pattern holds, essentially as long as price stays inside of this channel, you have to start thinking that Bitcoin has downside. Where's downside going to take you? The low end of the channel would be your first target. That's around 22,400. If that breaks, which, by the way, upsloping channels, if you look at a million upsloping channels, you'll see about 80% to 90% of them eventually break to the downside. Could be a month from now, could be 6 months, doesn't matter. The point is, an upsloping trend line, 80 to 90% of the time, will break to the downside. My guess is the break to the downside happens within 2 months, if not within a 1 month period. Okay, so that's your Bitcoin analysis. Again, Bitcoin right now chopping sideways. Again, reminder, that is a classic in spirit of bear flag. Bear flag by the name indicates that the probabilities signal downside coming. All right, let's go on to some other charts here. What's moving today in the stock market? Let's take a look at First Solar. First Solar is getting a solid bid today, up $10 and change on the back of earnings. Volume is light, only 55,000, so that makes me a little bit cautious on trying to short this. But let's look at some levels. So right now it's at trading basically at $180. There is resistance right here at 180. I will not short that, not with the volume this light. All right. However, if we run up to 185.75 to 186, a double top right here, okay, that would be an opportunity for a potential short. All right, so I will be watching this on an intraday basis. I'll be analyzing the volume real time. And if I do decide to day trade this on the short side, that would be my first indicative level for a potential short. All right, so again, that's a potential opportunity. If by chance we get through, you have no major resistance until this upsloping yellow line. That would be your next level. That would actually be a swing trade short. Now, this is important, guys. Check this out. So basically, you have the difference between day trades and swing trades. And this is a great example. There are levels that as you become a pro, you're going to look at and say, you know what? As a technical quick trade, like a day trade where you're in and you're out within the same day, that's a good level. I should be able to capture some profits, some alpha there. You're going to also look at levels like that same blue level there on the chart of FSLR and say, or you should say, wait a minute, that's an intraday trade. It's not a swing trade. The swing trade has to be your highest probability over a multiple day period or week period. Well, very clearly, we see that this trend line, every time we hit, we get at least a couple days of downside, sometimes a lot more. That tells me that line, if we were to trade up here, that would be a major resistance level. All right, and that would be a swing trade short. All right, let's go on to some other charts here, guys. Let's go to gold. Let's talk a little bit about gold. Gold continues to bounce. I call this to a T. All right. So when we were number one, you guys know I've been bullish on gold for a long time. All right. But there was a point when we were up here on the chart of gold where I said to you guys, listen, I'm not advocating buying gold up here. Let it pull back. It's run too far. It's run too fast. No chart goes straight up, at least on a healthy basis, and no chart goes straight down on a healthy basis. So what do you want to do? You want to wait for a retrace to the scene of the crime. Look at the retrace and look at the level. Pivot high, choppy, breakout, retrace to the scene of the crime. That was your buying opportunity right there. I picked up some GDX. I picked up some other things out there. Again, if you're a member of InTheMoneyStocks.com, you know exactly what I picked up over the last week or so as we were coming into this level. Gold is having a nice bounce today. GDX is up, etc. All right. I still believe gold will be the best performing asset. All right. I talked to you guys via a post on Twitter recently about where I expect the chart of the S&P to go. All right, over the next 12 to 18 months, I'm anticipating a drop on the S&P 500, another 22% to downside to this long-term trend. Now, you'll have big bounces along the way. Don't go and misconstrue what I'm saying. I'm not saying that we're going straight there in the next 3 weeks. I'm saying that over the next 12 to 18 months, we are going to meander down to this level down here. All right. And again, that's right around 3,000 on the S&P 500. So what that means is that S&P is going to underperform. If the S&P is underperforming, you better believe that Bitcoin is going to struggle as well. It's a risk asset right now. All right. Yes, I do believe there'll be a pivot point where it becomes more like gold. That's not yet. We still have to wait for that to happen. Probably coincides with regulation and bigger money starting to feel comfortable getting in the crypto space. But bottom line is, if we head down here, assets across the board are going to go down. I do think gold would gain traction, though. Gold is a safety asset. It's also an inverse dollar play. The dollar at some point, and we're starting to see it now, starting to weaken, and the markets are not rallying. There's going to be a point where the dollar is falling, and this is the scariest of all. The dollar falls, and the markets fall too.